Greetings to Dr. Afiq. We are from Group 1 and my name is Mohammad Khairil. This is video presentation for Bank Lending Assessment and Management. We start from introduction. The financial analysis of Nestle Berhad based on audited statements from 2020 to 2022, where we will value the company in terms of profitability, liquidity, and debt levels. Based on these financial metrics, we will make conclusion either the company able to loan a 10 million ringgit Malaysia or not. Also, the analysis in qualitative factor such as market position, competitive strength, and management should also be considered before a final decision is made. The company background. Nestle is a leading food and beverage manufacturer in Malaysia, operating since 1939, with 8 factories and over 5,000 employees. It dominates the FMCG sector, offering popular products like Milo, Nescafe, Maggi, and various nutrition items. Despite economic challenges such as rising raw material costs and inflation, Nestle remains resilient due to its strong brand and diverse product range. The company is seeking a RM10 million loan to enhance its working capital, particularly in supply chain and inventory management. Given its solid financial position, Nestle is considered a low-risk borrower.
Assalamualaikum to Dr. Rafiq bin Idris. My name is Nur Aiman bin Ahmad, and I will explain the question number 2 for this assignment, which is financial ratio of the Nestle Sdn Berhad. And I will explain the profitability ratio, liquidity ratio, and gearing or leverage ratio. So for profitability ratio, formula to find net, we will looking for net profit margin. So formula for net profit margin is net profit divided by sales times with 100 and equals the answer, which is net profit margin. So for 2024, 10,884 divided by 91,354 times with 100, the answer will be 11.91%. So for 2023, 11,209 divided by 92,998 times with 100, and the answer will be 12.05%. And the last for 2022, 9,270 divided by 94,424 and times with 100, and the answer will be 90.82%. So next is for liquidity ratio. So we will looking for current ratio only, and the formula for to find current ratio is current asset divided by current liabilities. So for 2024, 35,188 divided by 42,863, and the answer will be 0.82%. For 2023, 30,857 divided by 37,084, and the answer will be 0.83%. So for last is 2022, 35,062 divided by 39,976, and the answer will be 0.88%. Last one is gearing or leverage ratio. In this ratio, we will looking at debt or equity ratio. Formula for this ratio is total liabilities divided by equity. So for 2024, 102,571 divided by 36,693, and the answer will be 2.80%. For 2023, 90,163 divided by 36,387, so the answer will be 2.48%. And last for the 2022, 92,390 divided by 42,780, 92, and the answer will be 2.16%. And for the summary, for profitability ratio, profitability is improving overall from 2022 to 2023, but slightly declined in 2024. For liquidity ratio, current ratio and quick ratio remain below 1.0 across 3 years, indicates reliance on short-term liabilities or reduced short-term assets. And last, for gearing or leverage ratio, the value increased from 2.16% in 2022 to 2.80 in 2024, meaning that the company is using more debt to finance operations. Despite more debt, the interest coverage ratio stayed above 8 for over 3 years, meaning that Nestle earned sufficient profit. Thank you.
Assalamualaikum and hi, my name is Siti Zulhaiha binti Mohammad Ali Hanafia. Let me now explain the profitability analysis of Nestle from 2022 to 2024. Firstly, the net profit margin increased from 9.82% in 2022 to 12.05% in 2023, then slightly dropped to 11.91% in 2024. Despite the small drop, the margin remains at a healthy level, indicating that Nestle is still earning good profits from its sales. Secondly, the return on assets increased from 6.86% in 2022 to 8.86% in 2023 before decreasing to 7.82% in 2024. This shows the company's assets are still being used efficiently to generate profits. Lastly, the return on equity also improved from 21.66% in 2022 to 30.81% in 2023, then decreased slightly to 29.65% in 2024. This level of ROE is still considered excellent and attractive to investors. So, Nestle's profitability remains strong despite minor fluctuations. Next, let's look at the liquidity position of the company. Nestle current ratio remained below 1.0 from 2022 to 2024, with values of 0.88, 0.83, 0.82% respectively. This suggests that current assets are not sufficient to fully cover current liabilities. However, due to the fast cash flow from sales, the risk is still manageable. Similarly, the quick ratio stays low at around 0.5% to 0.51% over the same period. This indicates potential difficulty in paying short-term liabilities without quick inventory turnover. Nevertheless, since Nestle operates in the fast-moving consumer goods sector, the risk of liquidity shortage is still considered low under normal operations. Now, moving on to gearing or leverage. The debt-to-equity ratio increased from 2.16% in 2022 to 2.8% in 2024. This indicates higher dependence on debt, which could raise financial risk if not well managed. However, the company's interest coverage ratio stays strong across the years, 9.86, 8.55, and 8.66%, showing that Nestle is comfortably able to pay interest using its operating profits. In conclusion, although Nestle is using more debt financing, its strong profit performance and ability to meet interest payments make it a financially stable company. Banks or lenders may have concerns about its liquidity, but Nestle's overall financial strength can support its creditworthiness. Therefore, we need to look deeper not only through the company's financial potential, but also look at the company's performance to provide loans.
I'll be presenting an overview of the financial strengths and weaknesses of Nestle Malaysia Berhad. This analysis combines both quantitative indicators and qualitative aspects that reflect the company's overall financial health and operational resilience. Let's begin with their strengths. Firstly, Nestle Malaysia holds a strong market leadership position. especially in food and beverage segments. Iconic brands such as Milo, Maggi, and Nescafe continue to dominate consumer preferences, building strong brand loyalty across the country. Secondly, the company demonstrated a solid financial performance in 2023. Despite economic headwinds, Nestle recorded a 5.8% increase in revenue, reaching 7.05 billion ringgit Malaysia, with a profit after tax of 659.9 million ringgit Malaysia. This indicates the company's ability to sustain profitability in challenging environments. Thirdly, Nestle excels in product innovation. The company regularly introduces new items like Maggi, Mi Goreng Laksa Warisan, and Nescafe 2-in-1 cold coffee mixes, catering to evolving consumer tastes and enhancing market relevance. Another major strength is Nestle's commitment to sustainability and ESG initiative. Projects like Relief and Save, along with community-focused efforts such as Milo's Energy for Good, showcase the company's dedication to both environmental care and social impact. Now let's look at the weaknesses. One of the key concerns is the company's low liquidity ratio. For 3 consecutive years, both current and quick ratio has stayed below 1.0, signaling potential short-term financial risks, especially if sales slow down. In 2024, the company also faced a decline in performance. Revenue dropped by 11.7% to 6.22 billion, and profit after tax plunged by 42.9%. This was mainly due to weaker domestic sales and increasing costs of raw materials like cocoa and coffee. Additionally, inventory management remains a challenge. Studies indicate that excess inventory could threaten Nestle's ability to settle short-term liabilities, especially during slower turnover periods. Another internal weakness is the complex organizational structure. With a matrix structure covering multiple brands, the company may face coordination issues and inefficiencies in addressing diverse market needs. Lastly, Nestle has recently faced reputation issues due to product boycotts, especially in Muslim-majority markets like Malaysia. The boycott, driven by pro-Palestinian sentiment, has significantly affected consumer perception, resulting in a sales decline for key products such as Nescafe and KitKat, even though the company denies direct involvement in the conflict. In conclusion, Nestle Malaysia shows strong performance in branding, innovation, and sustainability. However, the company needs to focus on improving its liquidity, inventory efficiency, and organizational structure. Addressing these internal weaknesses will be crucial for maintaining long-term growth and consumer trust. Thank you. That's all from me.
Greetings, my name is Mohammad Afiq Ikram bin Saad, number matrix BB221100342. After evaluating Nestle Malaysia's financial performance from 2022 to 2024, I will now present our recommendation on whether the bank should offer a loan facility to the company. Starting with profitability, Nestle Malaysia has demonstrated strong profitability throughout the 3-year period. Net profit margins were healthy, recorded at 9.82% in 2022, increasing to 12.05% in 2023 and slightly decreasing to 11.91% in 2024. Return on equity consistently exceeds 20%, peaking at 30.81% in 2023. Return on assets remains solid, ranging between 6.86% and 8.86%. These figures reflect sound management and efficient use of resources to generate earnings. However, they are concerned about liquidity. The current ratio has remained below 1 over the 3 years, standing at 0.88 in 2022, 0.83 in 2023, and 0.82 in 2024. This indicates that Nestle may struggle to cover short-term liabilities without depending on inventory. The quick ratio, which includes inventory, stands low at around 0.50 to 0.51. This suggests significant liquidity risk and limited access to immediate cash. In terms of inventory management, the company faced issues of overstocking. This may lead to inventory becoming obsolete or needing to be sold at a discount. Such situation can harm both margins and cash flow, particularly during uncertain market conditions. Regarding leverage and debt levels, the debt-to-equity ratio has increased steadily from 2.16 to 2.8. Although the interest coverage ratio remains acceptable at above 8 times, the rising debt burden reduces financial flexibility and increase the company's exposure to interest rate fluctuations and external shocks. Another major concern is the financial performance in 2024. Revenue declined by 11.7%, falling to Rm 6.22 billion. Net profit dropped sharply by 42.9%. This was mainly driven by weaker domestic demand and higher input costs for key commodities such as cocoa and coffee. This trend indicates growing financial vulnerability. We also need to highlight reputational risks. Consumer boycotts due to geopolitical controversies have significantly damaged the brand image. Major products like Nescafe and KitKat have experienced falling sales. In a culturally sensitive market like Malaysia, this type of reputational damage can have long-lasting financial consequences. Lastly, Nestlé's organizational structure adds to the risk. Its complex matrix structure has been linked to inefficiencies and delays in decision-making. This becomes especially problematic during crisis and can compound both financial and operational risks. In conclusion, despite strong profitability and earnings efficiency, the overall financial health of Nestlé Malaysia shows multiple areas of concern. Weak liquidity, increasing debt, declined revenue, reputational damage, and structural inefficiencies all contribute to heightened credit risk. Therefore, we recommend that the bank should not proceed with offering the loan facility at this time. Thank you.
Assalamualaikum, my name is Nur Rasyadah binti Albani. My number matrix BB2211016. Based on a comprehensive evaluation of Nestlé Malaysia Berhad, it is recommended that the company RM 10 million working capital loan application be rejected. This decision is not solely based on financial data, but also on several non-financial concerns that collectively reinforce the credit risk associated with the loan. Firstly, reputational risk is worth mentioning here. In 2023 and 2024, Nestlé was the subject of aggressive boycott in Malaysia and other Muslim majority countries over its allied association with the Israel-Palestinian conflict. This issue severely damaged consumer sentiment at the local level and subsequently in sales of major brands including Nescafe and KitKat. While reputational risk will never be found with an accounting ledger, the effect can be felt almost immediately in sales and cash flow, particularly in culturally sensitive markets. Secondly, operational complexity also poses challenge. Nestlé matrix organizational structure might hinder shift decision-making during times of financial or reputational crisis. High coordination costs, lower response times, and inefficient in internal alignment may delay corrective action and added risk in time of financial stress. Lastly, the company dependence on inventory for liquidity is troubling. With a quick ratio of 0.5 until 0.51, Nestlé depends heavily on the timely sales of inventory to generate cash. Excess stock, especially in a weakened consumer environment, may become obsolete or require heavy discount to clear, affecting profit margin and liquidity. To summarize, in spite of continuing to be the market leader in Malaysia with global reported brand and a proven record of good past performance, Nestle is at this point in time an illiquid and highly leveraged firm, and coupled with internal non-financial risk, is not an attractive option for additional short-term credit at this stage. The bank will therefore have to monitor the company and consider a financing proposal once there are evidence improvement in liquidity, leverage, and stable reputation. That's all. Thank you.
The conclusion: from 2022 to 2024, Nestle Berhad shows strong profits with a net profit margin above 9% and return on equity over 20%, proving it is well managed and efficient. However, its financial health has some serious concerns. The company's liquidity is weak, with current and quick ratios below 1.0, showing heavy reliance on selling inventory to pay bills. Inventory levels are high, which could slow cash flow. Debt has also increased, with a debt-to-equity ratio rising from 2.16 to 2.8. Though Nestle can still cover interest, higher debt makes it more exposed to financial risks. Operational complexity and reputation issues, including major consumer boycotts in 2023 and 2024, have further hurt trust and sales. Because of this risk, we do not recommend approving the RM10 million loan at this time. Nestle remains a strong brand in the FMCG sector, but the bank should wait for clear signs of financial improvement before reconsidering financing.